Glenn Haydenchuk. Thank you for listening to our Financial Lens episode titled Financial Strategies for Inflation. Ultimately, inflation is a spending issue, not an investment issue. Certainly, we need to have distributions from our portfolio to meet our spending needs that increase with inflation, but this does not necessarily translate into investment strategies that require higher returns. When we look at different approaches to investments, we could take an investment allocation approach or a disposition allocation approach. With an investment allocation approach, what we want to do, we want to focus on the value of our portfolio because we rely on the value of our portfolio to meet our needs over our entire lifetime, to cover all our spending needs, to cover the unanticipated expenses that may come up, how we leave money to heirs. And if our portfolio loses value, then we're not going to be able to meet our spending needs over our entire lifetime. When we take a disposition allocation approach, we take an approach where we're looking at how do we align our wealth with the financial destinations we want for our money. Do we want to get income from our wealth? Do we want to get growth for just flexibility for future spending or however we use it? Do we want to get protection from our portfolio with financial instruments that are insurance products? Do we want to get the transfer benefit from our portfolio that will allow us to leave money to our heirs, our loved ones? So when we're looking at the effects of inflation, we want to really focus on what our spending priorities are. We want to take a strategic view of what is important for us to spend our money on. And when we do that, we look at our essentials, the things we need to spend on to meet our basic needs. We look at what I call extras, those things that make life more enjoyable. When we take a deeper view of who we are as individuals, we really recognize how we spend our money is maybe less dependent on what is absolutely essential to what our values are. I call it our beliefs, values, and character, what we want to spend our money. Because when we look at it, we can certainly live at a lower standard of living, but the standard of living and of course our lifestyle are dependent on our values and how we want to spend our money. Ultimately, what we want to do, we want to look at our quality of life that is really much more important and doesn't necessarily tie to standard of living. We can have a great quality of life without high expenditures, without a high standard of living, without even having an expensive lifestyle. So when we look at these deeper value-based views of our quality of life, we look at how much money we really need to accomplish those things that are most important. And when we do a value-based perspective to how we're spending our money, what's important to us, we also look at what I call life goals, hopes, and dreams. Those things that make life really extraordinarily wonderful to us. The experiences and relationships we have, the accomplishments we've made in our life, and the impact we were able to make in the world around us. And when we align our wealth with these important objectives, we recognize that maybe we don't need to have as much growth in our portfolio to support spending levels, to spend money on things that don't really necessarily provide us as much enjoyment as we think they do and don't really tie to our values of what's really important to us. So when we take the view of making spending priority focus on what's important to us, where the priority of our spending is most important, and then we look at how we align our assets to meet that, we recognize that there are different ways to structure assets. Certainly, we can chase after returns, but we also can do what I call the disposition allocation approach and have financial instruments in place that give us guaranteed income over a lifetime that may cause us to not have as much wealth, but if we protect ourselves with different financial instruments with insurance and have life insurance to leave wealth upon our passing to those that we want to have money when we leave this earth, then we know that we may not need to have as much wealth and we may not need to chase after investment results. The problem with taking an investment approach and looking at that as a way to meet our spending needs is that we may take more investment risk than we're comfortable with. And we're taking distributions from risky investments. That investment should lose significant value, and we're pulling money out of our investments that lost money. We may find out that we could run out of money sooner because of the overly aggressive investment strategies. So ultimately what we want to do, we want to look at how we're spending our money, why that is, structure our wealth with the right amount of risk, the right amount of returns for what's appropriate for us given how we're distributing our money from our portfolio or comfortable with risk, and ultimately align our money with what I call those values, and we bring our money to life to allow our wealth to fund what's most important to us. You can read more about my financial strategies, bringing your money to life, in my book called Maximizing Your Retirement. And I wanted to thank you for listening to our Financial Lens episode titled Financial Strategies for Inflation.